Well, State Bank of India has posted a stellar set of numbers for the second quarter, beating street estimates. The bank reported its highest ever quarterly profit of over 13,260 odd crores, 74% higher compared to last year, and an NII growth of 13% YOY. Advances also grew by about 20%, and asset quality saw an improvement as well. Gross slippages falling to about 2,400 crores from over 10,000 crores in the previous quarter. We have with us the man of the moment, Mr. Dinesh Kumar Khara, Chairman of State Bank of India, joining us to take us through the fine print of these numbers. And also joining me from the Mumbai studio is Abhishek Kothari. Mr. Dinesh Khara, thank you very much for being with us here. A stellar set of numbers, like I was saying, from SBI in the second quarter. Now, what next? What could you tell us in terms of the growth outlook as well as the asset quality? Will this kind of trajectory sustain where your gross NPAs have already fallen below, are now at less than 1% net NPAs and gross NPA at around 3.5%, slippages quite low? What could you tell us about the outlook?
I think I would like to say that the kind of growth numbers which are there, partly it is also a function of the busy season which you have just closed. So I think going forward, I still expect that the credit growth should be somewhere in the range of about 14 to 16%. And as far as the credit quality is concerned, over the years we have strengthened our underwriting processes quite a lot. So which has helped us in mitigating the credit risk which was there in the balance sheet. And hopefully we should be in a position to maintain this kind of a credit quality going forward. As you are aware that the book is about 54% is now 52 to 54% is now retail. Very important component there is our ability to reach out to the customers in time. So we have recently started our call center, which is state of the art. So which has helped us in reaching out to the customers, and the pre-delinquencies calls have become a reality, and that has helped in the past also. Our NP ratios in the retail was much lower, and even in the corporate side also, as I mentioned, the risk management has been strengthened quite a lot. The credit review department which evaluates each and every credit proposal thoroughly, that also give their input. So these kind of better underwriting practices also has helped us in achieving the kind of the credit quality which we have done. Agriculture and SME also our effort is to go for even CGTMSE loan, even vendor financing, where there is a clear visibility in terms of cash flow. So that has also helped us in improving our underwriting in the SME sector. And I think overall all sectors we have seen the improvement in quality of advances.
We'll come back to the advances growth later, Mr. Khara. 15 to 16% advances growth target for the year. But let me come back to asset quality, because your SME 1 and 2 book, that has increased over the previous quarter, now at around 8,497 crores. What led to this kind of an increase, and could you give us an outlook going forward? When do you see this reducing meaningfully?
What is happening is SMA 1 and SMA 2 is a position as at a point of time. So out of this, normally we pull back, and naturally on the day of the balance sheet we see these numbers, but we invariably pull back these numbers. Out of this, so I remember 1,700 crore was one of the slippage which happened, but we have already pulled back that account also. So similarly in the retail also, the amount has been pulled back. It is almost the responsibility of the teams which are doing the collections on a regular basis. So I think I don't perceive it to be a major challenge, because the very major component of that is into the SMA 1, which gives us the room for recovery as well. So I think we should not have much of a concern relating to SMA 2 and SMA 1 and SMA 2. Only requirement is that we should stay focused on these numbers and ensure that we're in a position to pull back.
Well, the advances growth was quite good for the quarter, almost 20%, and you're guiding for a 15 to 16% growth for the year. Where will this come from, if you could break up for us from the retail and the corporate side? Within corporate, working capital, project loans, and within retail, which sectors are showing promise?
See, we have got visibility of either proposals in pipeline or one which are sanctioned already, awaiting disbursement. So all that is somewhere in the range of about 3.5 trillion plus as far as the corporates are concerned. So I expect that going forward, the kind of availment which has happened from corporates in this quarter will have the visibility of similar availment going forward, because corporates are earlier raising money from overseas markets. Now overseas markets have turned expensive, and with the hedging cost, perhaps it is much cheaper to borrow from India as compared to borrowing overseas. So that is something which is, I believe, it will help us in seeing the decent corporate credit growth also, apart from the retail credit growth which you have seen all this while. And infrastructure continues to be a major focus area. And apart from that, the renewable energy is another very major area. And the PLI has also started showing good demand. So I think overall, I expect that that is one of the reasons why I've indicated that we should be in a position to see 14 to 16% kind of a credit growth.
Well, Mr. Khara, this is Abhishek Kothari this side. To begin with, you spoke about the credit growth. Now let's focus on the liability side. Is deposit growth a challenge for the system as a whole? What would your view be on the deposit growth trajectory for the system and for your bank?
See, as far as we are concerned, we have got some investments which are likely to be up for redemption in the current year, and it is as high as about more than 3.5 trillion as on 30th September when we have compiled these results, though it is even on the higher side now. So I think we would be in a position to unwind these investments and support the credit growth as and when this kind of a visibility will be there. And apart from that, at a system level also, I think the government, normally we expect that the spending from the government will also go up somewhere towards December, January. And that will also bring in more money into the system, and which will also address the liquidity requirement of the banking system.
So, sir, one question on the net interest margin. It improves sharply on a sequential basis. So, can the upward trajectory in your net interest margin continue in a rising interest rate scenario?
In the net interest margin, we have got one small exception, which is 592 crore is the interest on income tax refund. Though last year on a YOY basis, it was 1,792 crore. So I think this is one area which may not be there, but otherwise I expect that considering the lag in the interest rate when it comes to deposit repricing and also the asset repricing, I think we will have a reasonably decent opportunity to have decent margins.
So one of the business segment which stood out was your overseas business. Now there is slowdown in exports that we know. Do you see foreign business momentum to slow down going ahead?
We have got about almost about 60 billion balance sheet, overseas balance sheet, $60 billion, and out of that $60 billion, it is equally split into the local financing, the trade finance, and also the borrowing, which is ECBs. So I would say that if at all, this is the kind of a growth which we have registered in rupee terms, but if we look at the dollar term growth, it is about 18%. So I think as far as the ECBs are concerned, we expect it to slow down a bit. But as far as the local borrowings are concerned, and also when it comes to the trade finance, I think those opportunities are normally in the overseas geographies, and our major geographies are USA, UK, and Hong Kong and Singapore. So these are the major geographies where we are lending. And apart from that, TCBs we are normally parking in the gift city. So that's how the whole split is. So I think what I expect is that as far as the USA and UK are concerned, there should not be any major challenge, and because we are in any case, we are participating in the syndicate deals. We are not as much into the bilateral deals.
Okay. Just another question on your NCLT portfolio. Any resolutions, or what kind of resolution momentum do you see over the next 6 to 12 months?
Yeah, we are, see, now there are multiple agents which are at work. So that is multiple agent. When I say multiple agent means NARCL is also active, IBC is also there, even OTS and the compromise proposals are there. So it is not necessarily NCLT, but the various other options are available. And we have already seen in our OCA book, we have seen a decent recovery this quarter. So I think overall I expect that this is also much in focus. And we are exploring all possible opportunities to resolve our NPAs and also our OCA book.
In that case, Mr. Khara, could you give us a sense on what kind of recoveries and upgrades you're expecting through the rest of the year?
I think we have set a target for about 10,000 crore worth of recovery from the OCA, and we should be in a position to achieve that kind of a number.
Okay, and
NPAs in any case, I think. Sorry, please go ahead.
Sure. With the kind of growth that you've projected, would you require any fundraising in the near term?
I don't expect, because we have not plowed back our profit as of now, and we expect that somewhere around 25 to 30,000 crore kind of a plowback should be there at the end of financial year, and with that kind of the plowback, will be in a very comfortable position. And even now also, the kind of growth which we are expecting, we have actually done some extrapolation, and we can support that growth.
And, finally, Mr. Khara, the last time we spoke, you did mention that your plans to take the mutual fund subsidiary public is on hold. When do we see you moving on that front, and what is the reason, other than, of course, we're seeing a bit of a choppy market right now, that you're not exploring this route as of now?
See, essentially asset management companies are asset light industry. So as such, the company does not need capital. But so that is the reason why it's a very well nurtured entity, and we'll wait for the right and opportune times when we should think about it, and that is the point of time when we will plan, if at all we will plan for it.
All right, Mr. Khara, thank you very much for speaking to us and taking time out for us here at CNBC-TV18. Pleasure speaking with you.
Thank you very much.
All right, on that note, we have to slip into a short break, but don't go anywhere. We're back with more numbers from Bank of Baroda and other FMCG companies, so stay tuned for that.